Good morning, I'm Haley Bohal. Thank you for attending our Research Development Proposal Development Workshop number 10, which is budgeting for proposals. I'm joined today by colleagues Michaela and Howard, who are going to be our presenters, and I will pass it straight over to them to get started on this session. Thank you.
Great, thanks, Haley. I'll get it started here. So good morning and welcome to our presentation, Navigating the Pre-Award Budgeting Process. This will really be a basic introduction to creating budgets for all types of sponsored research proposals. We'll get in depth about the different budget categories, cost sharing, planning for global projects, and we'll include some time at the end for questions. We appreciate your time in joining us today. Please excuse me as I'm a little bit under the weather. So if anyone can't understand me, please just go ahead and ask questions as we go. So this is us, Michaela. To introduce myself, my name is Michaela Majidi. I'm a Research Advancement Administrator at ASU. I've been in this position for about 6 years and a university employee for almost 10 years. And before that, a university student. So, but in sponsored projects, I've always done pre-award proposal preparation. Haven't really worked in the post-award grant management, but I've worked on all sorts of sponsored proposals for the NIH, the NSF, the DoD. We do a lot of Department of Education. We're both in the MLFTC Teachers College. And I'm presenting today with my colleague, Howard Bergman, so I'll let him introduce himself.
All right, thanks, Michaela. And good morning, everybody, and thank you for attending today. My name is Howard Bergman. I am the Director of Research Advancement here in Mary Lou Fulton Teachers College. I've been with ASU now for almost 13 years, 12 here in Teachers College. And in total, it's scary to say, but I have just over 25 years working in higher education. I started at Northeastern University in Boston, and then I was at Princeton University in New Jersey for quite a long time. I've been in multiple roles around universities, ranging from admissions to academic advising, to program management and grants. And about 17 of the years that I've been doing this, I've been working in grants management, the majority of which has been in pre-award, but I've also done some post-award in the past as well. So we're really thankful for you to join us today, and hopefully it will be fruitful and you'll get a lot of good information. Please, one thing I just want to say is feel free. You can certainly hold your questions till the end, but if you have something that comes up during one of the slides, feel free to put it into the chat. I think Haley is going to monitor that for us, although we'll try to do it as well. But thanks again, and I'll turn it back to Michaela. Oh, actually, back to me. So this is our agenda for today. We're going to start off going over the RFA, which is the research funding announcement, also just known as an FA. After that, we're going to move into specific budgeting categories. We'll definitely touch on the importance of a strong budget justification, and then we'll finish with a couple of notes to be aware of, some helpful hints, if you will. If you're working on different proposals, particularly international proposals. And now I will turn it back over to Michaela.
So thanks, Howard. So of course, one of your most important resources when starting your budget is going to be your funding announcement. This is a document provided by the sponsor that details not only what they're looking for in your proposal, but also the limitations of the funding that they're willing to provide for your project. So as Howard said, the funding announcement, or FA, it may be called RFA, it may be an RFP, which is request for funding proposals, or a lot of times we refer to them as the FOA for short, funding opportunity announcement. So as you can see from our slide, a bit of the most important information you'll find on the RFA is regarding eligibility. Determining eligibility at the get-go is probably the most important part. So are we eligible as an institution Does the proposed PI meet any eligibility criteria for who can serve as the head of your project? Like, is this call open to anyone, or is there criteria like the PI must be a beginning investigator, or does our institution need to be an HSI or an MSI, et cetera, to apply? Your RA can help you determine both of these external and internal eligibility requirements. So your RFA may also specify a limitation or minimum or maximum on the amount of funds available for the project, as well as how many years in duration they're willing to fund. And often they'll have specific allowable or unallowable cost items, or required cost items. So the funding announcement or the sponsors guidelines should also list this amount of overhead they're willing to pay, and the terms of the overhead, like total direct or a modified total direct cost. Some sponsors may limit this rate, or our federally negotiated rate may be used in the case of federal sponsors or other situations. And of course, overhead is the same as indirect costs, which Howard will discuss later in more detail. But mostly the funding announcement can be used as a guide to put together a project plan, not only for your budget, but also for your entire proposal submission. And usually the RA should help you kind of put together a proposal timeline for submission. So also going through your RFA, when you comb through it in detail, you can kind of pull out red flag items like matching requirements, or other collaboration requirements, which may need extra time and approvals during your preparation process. This can really allow you to plan ahead and can give the PI like an informed internal timeline for preparing the proposal and budget. So here at the bottom of this slide, we've included 2 tips. It's really important to reach out to these collaborators early, especially subcontracting institutions. Usually a subcontracting budget needs to be built into the full proposal budget before everything can be finalized, since the sub-budget will affect your indirect costs and other project costs. Things like cost share or other unusual steps may include things like waiver requests or foreign currency or reporting or inclusion, or additional signatures that may be required, that all sort of take time through the approvals process.
Okay, thanks, Michaela. So these are just a general idea of the budgeting categories that we're going to go through. These are the main categories that you would have when you're building a budget with your research administrator. So I'll go through each one of them in different slides, but just kind of in general. Personnel, senior or other individuals, which are ASU personnel. Employee-related expenses, which are also called fringe benefits. Travel, any consultants or outside services that we may use from vendors. Materials and supplies that you may purchase, any equipment you may need. Those are 2 separate items that I believe Michaela will talk a little bit more about. Participant support and human subjects costs. I'll talk about those. They are very different and they mean different things, so please be careful when you're using the term participants. Other direct costs, we'll discuss some different things that you can also include. Subcontracts, and then again, indirect costs. So this is just kind of a list of what we're going to cover quickly. All right, first off, so personnel, which refers to salary and wages. So salaries may be included for faculty during the academic year, which may be considered course buyout or course release, depending on your college and what they allow. Or you may be paid out during the summer. So most faculty get paid on 9-month contracts and they don't get paid during the summer. So grants can cover summer salaries for them as well. During the academic year, the salary is a replacement of their regular salary, so it's not additional. Although again, it may allow your faculty member to lessen their teaching load during the academic year. And of course, it needs to be approved by the college. Summer salary is paid out during the summer months and usually is in addition to their regular salary, as I had discussed before. So very often faculty will want that in the summer because basically it means they're getting more salary. However, the advantage of having it during the academic year is that they may be able to get a course release where they can focus more on their research and be bought out of one or more of their courses scheduled to teach. Staff salaries, that might cover all or a partial amount of a staff member's regular salary. It should be very accurate as to how much effort they'll devote to the project. We do have people that maybe they're 50% on one project and 50% on another project, paid similarly on each. And they're expected to work the same amount of time on each one. That can be broken down. It could be 80%, 20%. It could be the university pays X percentage and the grant covers a certain amount. So it's a way to get to have staff that are specifically designated for your project. If you choose to hire postdoctoral associates, again, great way for you to get an early career person that might be a polished researcher or really well-versed at data analysis. Certainly helps them in their career path. I'm sure most of our faculty and a number of people in this room right now have probably been postdocs. A graduate research assistant may be hired. So a graduate student, that could include salary as well as tuition remission. Usually we at least in Teachers College now, we try to do that on a full-time basis. So if we're going to have a grad student, graduate research assistant, we try to make it a full-time person. However, some departments might allow that to be partial, 50%, 25%, et cetera. Normally the percentage would be the same for the tuition remission as well as for what their salary would be. Often what we include here are hourly employees, most often a graduate student or an undergraduate student, paid by the hour. But that person would not get the tuition benefits, so they would not get tuition remission. It would simply be a part-time job for them, and that's normally limited to a maximum of 20 hours per week during the academic year, and they are allowed to work 40 hours a week during the summer. Again, no tuition remission on that. Last thing I want to mention here, which is not on the slide, but I just wanted to mention quickly, is that if you have a consultant who is not an ASU personnel person, an external consultant, they would not go under the personnel categories. They would go under other direct costs, and then we have a consultant opportunity to put that in there. So it would be included under other direct costs. And then the next, we'll talk a little bit about employee-related expenses. Refer to these abbreviated as ERE, but these are your fringe benefits. As you can see, it covers quite a bit. We always get these questions about it. Well, what does the fringe benefits cover? So there's a little bit of information here, but again, this is provided to the employees based on rates that Arizona State University negotiates with the U.S. Department of Health and Human Services. And these would be added onto the requested salaries and wages to determine the total costs. Again, this usually only applies to ASU employees. The rates can vary based on the position category, as you can see on the slide. For this year, you can see the rates on here. When we do, it can change, it will change annually. When we do budgets for grants going forward, we'll usually include a 3% increase annually when we create the budget. It may or may not be exact when the actual rates come out. The actual rates will apply, but at least it gives us a close approximation for when we put together a budget. Always included unless it's not allowed by the sponsor. One example for this is there are some fellowships that will only cover salary and possibly some other research needs. Maybe there's some travel involved or some materials that might be needed. So it would have to be specific. Otherwise, if they're an ASU employee, they're going to have these employee-related expenses included in their budget. Any questions about personnel, fringe benefits, employee-related expenses, anything about that? Again, as I said, you can hold your questions to the end if you like, or you can put it into the chat. And moving on to travel, I will turn it back over to Michaela.
So here's a slide on some different categories of travel that you may budget on your proposals. Travel is often requested for project activities and sometimes even required by the sponsor to attend a conference or a meeting. For example, I believe the NSF often requires an annual project travel to a PI meeting, but we do have to follow all ASU policies on travel, including rates for per diem and lodging, which varies according to your travel destination. We can sometimes pay for short-term visas and other fees, but long-term visas are generally not allowable. Transportation costs may be calculated by estimating round-trip airfare or if driving by using the travel services website to determine the mileage reimbursement rate. This rate was recently and finally increased. So that's good news with the increasing costs for travel that we may all be aware of. When flying on federal grants, we also participate in the Fly America Act, which requires us to use US flag carriers to foreign destinations. Also, you may see your RA add the My ASU trip fee of $11 to any travel that you're budgeting on a proposal. This is a direct cost to the project, and it covers the ASU travel trip system, Concur, that you may all be familiar with if you've traveled for business through ASU. One note too is that ASU does not permit payment of dependent care costs for business travel, and therefore it should not be included in the budget. Even though the sponsor may consider this cost allowable, a general rule of thumb for budgeting on proposals is that the most restrictive policy applies. So in this case, it would be ASU's policy. Any questions on travel before I move on? Okie dokie. So now we're getting into other direct costs section of your proposal budget. And we're going to discuss consultants and services or vendors first. So consultants may be experts that are assisting with the project, but generally they're not considered key or vital personnel. These are not project investigators. They're not partner universities that will offer a subcontract to. We'll go over subcontracts later. But they're people or companies that provide a specific need or a service to assist with the project. Detailed responsibilities and cost requirements will need to be included in the budget justification, such as daily rates for the consultants or one-time charges or quotes. Things you may need to consider when budgeting consultant fees might be what is their experience and credentials? Have they done this type of work in the past? How much value will they add to the project? If you're hiring an outside company to provide a specific service or materials, what's their background? Are you including consultants to help design the activities, conduct research, or interpret and analyze the data? So those specific responsibilities will be detailed out in the budget justification. I'm often asked, what should I pay my consultant for this? So those are the sorts of questions you would want to consider if your consultant isn't providing you with a specific fee. And I'll mention too as well while I'm on this slide, as Howard mentioned before, these are external personnel. So often in the Teachers College, we may have internal ASU personnel that may be providing different advice or serving on an advisory board on a project. And that would be considered an internal consultant or inter-university consulting pay. This other direct cost line item is for external consultants only. Sorry. So moving on to another extremely common other direct cost line is the materials and supplies. These would include items that are essential and allocable. Those are key terms to the project and are used exclusively in support of this proposal or project. Almost anything may be requested as long as it can be justified and explained why it's essential and allocable to the project. Many times materials and supplies are consumable items. Grant may not be used to purchase supplies that are designed to outlast the project or used generally, or will not be used, as said before, exclusively for the project. If you're requesting like a large amount of things such as notepads, post-its, pens, pencils, folders, or other consumable office supplies, it may raise red flags unless you're being specific enough in your justification to show that those are supplies that are going to be dedicated to this specific project. Computers are now allowed if they'll be used exclusively for the project as well. They may show up under your materials and supplies because they're small equipment. Small equipment may be included, but larger equipment items would be considered capital equipment and would be included under an equipment line. Our ASU policy, I believe, is a unit cost of $5,000 or more, or fabricated equipment with a unit cost of $5,000 or more as a useful, that has a useful life equal or greater than a year. So the RFA or the sponsor or your institution may have policies about what constitutes the difference of materials and supplies and equipment. I'll send it back to Howard.
Yep. So other direct costs. So what can be requested in a budget? So here's a list of what we usually would include. Almost anything that you need for your project is allowable. Remember, but it has to be essential to the project and allocable. As Michaela said, those are important questions, important words. I try to include those as often as possible in my budget justification. Those are key words. Again, some of the most common expenses that you see on here, photocopying of documents, although that's become less and less, but we often do it here when we're having surveys or things like that need to be mailed. Any specific software programs for here in Teachers College, any payments to a school district. So for example, sometimes we may have teachers come in for training and the school district may send us an invoice for the substitute teachers that they had to hire in order to cover that time. That can be included under other direct costs. Any preparation of publications for dissemination that may be necessary, human subjects pay, participant support costs. I'm going to cover both of those in a second. And then any subcontracts, which will also be covered a little bit later. And then again, any other specific project needs that you may have that you need to accomplish the project, you can put in the justification, as long as it's not disallowed by the sponsor. Sometimes they will have a list of things that are allowed, that are not allowed. But if it's something that you can justify that you need it to complete the project, then you can put it into the budget and justify it. And these are just a couple of things. I mentioned substitute teachers, but also something we often do is transcription, maybe a focus groups or different interviews that are done, translation, which is becoming more common when we're working with people from that speak different languages. So it's a little bit open as to what you can ask for. It goes under other direct costs, and your research assistant certainly can help you with that. Getting into participant support and human subjects a little bit. So these are similar but different. So participant support are considered those that are attending a workshop, a conference, a seminar, or another type of officially organized activity that's specific to the project. The best way to think of this is that they may be thought of as people that we are giving something to or providing something to, such as we're providing them knowledge or opportunities to collaborate with others, things like that. They're basically getting something out of it. Usually there is no indirect costs incurred for this. That's what the IDC there stands for, indirect costs. For a government proposal where there are certain limits and certain policies that we follow. For a foundation or other entities that don't limit it, then the participant support would be included. And again, this is something that your research administrator will be able to help you with when you build a budget. When we pay participants to be part of the project, we would put those down as stipends normally, because they're getting paid to, again, to get something from us. Human subjects, on the other hand, are individuals that we are taking something from. So again, participants are getting something from us. Human subjects, we're taking something from them. And what are we taking from them? It could be we're collecting data that we're going to report on. We're observing behavior that we're looking for patterns or just trying to gathering information from. Indirect costs on this are included for human subjects. And the payments for human subjects, whereas participants, again, we call those stipends. Normally, any payments that we pay to human subjects, we'll call incentives, an incentive for them to be a part of it. In addition, for human subjects, institutional review board that we have here, of course, at Arizona State, IRB, review and approval is required before any activities involving human subjects may be undertaken. So we don't necessarily need to have that completed at the proposal stage. You can submit it, and most of the time we'll just put down the human subjects review as pending. But if you do get an award, you cannot start any work with human subjects until it goes through the IRB process, is reviewed and approved, and then they'll provide a letter saying that it's been reviewed and approved. That process is usually fairly quick, but it is something just to keep in mind that if it's not done in advance, that it must be done upon award and before you can start working with human subjects. You can start working on your project, just no human subjects activities can be undertaken yet. So again, just summing that up, difference participant support, they're getting something from us, right? They're getting knowledge, they're getting opportunities to collaborate. Whereas human subjects, we are taking something from them. We're collecting data or observing behavior and going to report on it. Important to know the difference. And be careful, it always happens using that word participants, because researchers will always use the word participant when they may be referring to human subjects, and we try to let them know that it means two completely different things when you're talking to your research administrator. So just keep that in mind. And we're going to move on to subcontracts, and back to Michaela.
All right, subcontracts or subrecipient institutions, subawards are research partners in the methods and results of the project, and they administer their own funds. They're considered another direct cost when we're building our budget in ERA. And the definition is they're an entity that has agreed to work in collaboration with the ASU PI to perform a substantive portion of the programmatic effort on an award. So subcontractors may be other universities, school districts, or another private entity that would be responsible for, in collaboration with ASU, the project methods, outcomes, reporting, and they'll usually help make administrative and programmatic decisions, and they're responsible to the sponsor for reporting requirements as well. So they may have an institutional PI or co-PI or key investigator on the project to lead their portion of the science. So with that responsibility, they'll also generally charge a certain percentage of overhead in their budget as well. They may have a negotiated indirect cost rate like we do, or they may charge the 10% de minimis rate, which we'll discuss later. But the way they differ from a vendor or contractor is that they're working collaboratively with the PI. They have key personnel that are contributing to the project team. A vendor or consultant, like we discussed in the other direct cost section, previously they provide a service to the project team for a fee. They may be providing this service to multiple institutions, whereas a subrecipient is going to work with the project team on the project aims. So there are several forms that are required. You can see there the statement of work, the budget, and justification. They'll provide this statement of work, which is sometimes and often included in the proposal to the sponsor. And a lot of times the sponsor will require a separate budget and justification broken out. So you'll want to work with your RA early on these things, even up to a month in advance of the deadline, in order to make sure that they have enough time to submit the budget to us if we're the lead. Oftentimes the sub amount may dictate what else we're able to afford in the ASU budget, depending on how much will go to the other institution. So when working with subrecipients, it's important to know who you're working with. Some institutions are really familiar with subcontracting documents, and others, like industry sponsors or maybe small nonprofits. We work with a lot of school districts that are maybe not familiar, or they don't have the support needed to accomplish the forms in the time frame requested. So your RA may send templates and extra information and help that the subrecipient may need, may be very helpful to them. So that's why I've put on here this FDP clearinghouse. Many institutions like ours are part of the FDP expanded clearinghouse, which is it's where partnering organizations have agreed to review each other's published profiles in lieu of sending and receiving individual subrecipient commitment forms, which contains all the information on their profile. So it's meant to reduce administrative burden for research administrators that are compiling all of this information. Okay, moving on to some unallowable costs.
Yes.
I'll send it back to Howard.
All right, thanks. So obviously for some of these items, a number of them are not allowed to be charged to a grant. Again, unless the agreement specifically includes them or there's a requirement, such as for memberships. So these items that are unallowable, these may include alcohol, entertainment, fines or penalties that you may have or that may be incurred. So for example, if you get a parking ticket because you're late to go to a meeting for the grant, you're personally responsible for that. You can't charge that to the grant because you were late to the meeting and got a ticket. Memberships in organizations are not allowed unless it's specifically required. Sometimes it is specifically required for you to join an organization in order to get the award from them. If it's spelled out like that, then yes, the grant can pay for it. Otherwise, it can't be included. You can't include different memberships just because you want to be a member of a certain organization and charge it to a grant. Any lobbying activities and any debt payments are not allowed. And you'd be surprised, but people have tried to pay off personal debts in the past with grant funds. So of course, there's oversight on all of this. Nothing sneaks through. And if certainly there's administrators and accountants and things that look over it, but people have tried to do it in the past, and universities have gotten in trouble for approving them. In addition, don't just use this specifically. A grant may also prohibit other expenses. Any information on that should be available in the funding announcement. So for example, there may be, maybe you're not allowed to pay any personnel for this. It's specifically for participants, or I won't say very often, but sometimes we will have grants where there have to be certain percentages that you need to consider that X percent of the funds being awarded have to go to a certain category, whether it's participant support or travel or something else. So just be aware of that, and that you should, of course, as we discussed earlier, very closely review that funding announcement so that you're aware of it. Next, I'm going to move into facilities and administrative costs, also known in short for F&A. but also known as indirect costs or overhead. I will admit some researchers don't quite understand this and don't exactly know why it needs to be included. It's extremely important to the university, to yourself, to your department. I hate to use the word profit, but this is kind of it's creating a revenue stream for the university. It's creating a revenue stream for your department, and it actually even has some cash advantages for you as the researcher. I'll talk about that a little bit. So basically, it's a percentage of the direct costs that are needed for the project, and then it's added on to then determine the total project costs. So as you can see here, I have an example. So let's say that your direct costs, which is everything that you need to run the project, personnel, salaries and wages, fringe benefits, travel, everything else that goes with it. Let's say for this example, those direct costs are $80,000. The federally negotiated rate, let's say this is a government proposal, our negotiated rate is 57%. So the 57% of that $80,000 is $45,600. Okay. Therefore, adding those two together, the total project costs would be $125,600 is what our request would be for this project. Again, you need $80,000 to run it. ASU, through our negotiated agreement for government proposals, is 57%. ASU would get $45,600 of that to manage it, run it, do everything else that needs to go through it. And I'll talk about those costs in a second. And your total cost would be $125,600 is what we would be requesting. So what are indirect costs, F&A costs? So it allows your home institution or ASU to recover real costs that will be incurred, such as general office supplies, printer paper, administrative wages, legal services in case there's any issues, utilities, keep the lights on, computer fees, phone fees, facilities maintenance. All of these things are real costs that the university has to pay to help you with your project. And that's basically where these funds go for the most part. Now, there is also a percentage of it that will go back to the university or your unit, college or department, and yourself as the researcher. These are, and you may know these, we call these allocations. There's three different types: REC, REC, RID, RID, and IIA. So REC is just recognition. Those are intangibles as far as how much credit do you and your department get for this project. It may be split, right? You may have somebody from teachers college and somebody from engineering. How is that broken down? Who gets what percentage? So that's what the REC part is, the recognition. RID is research incentive distribution. That comes back to your unit, your college or department. And that is real dollars, real funds that go back to them to use for different things, whatever it might be. It might be paying administrative staff, such as myself or Michaela. Our salaries may come out of that. So that's important for your college. And then IIA is investigator incentive. And that is actually a smaller percentage that will go back to you as the researcher. There will be a small account that will be maintained by the accountants in your department that you can use that for all different things. You can use those funds, and that's cash that goes into that account. You can use that to go to a conference. You can use it for different research activities. You can pay an hourly student to assist you on something else. I used to work in a math department, and we had a professor that would sit and stare at his whiteboard all day, and he bought himself a $2,500 chair so he could be comfortable, but he could justify it as being part of his research expenses. So he used it for that. So it is open as long as you can justify it being part of furthering research for yourself. It's a nice incentive to have. The rate, last thing I'm going to touch on this is the rates can be different. So for this example, I used 57%, which is our federally negotiated rate. That's for a research project. They can be different. They can be as high as 67.7%. for a corporate or industrial opportunity. They can be different. So again, 57% is our research rate. It can be lower if you're having an instructional project where you're going to be instructing teachers. Again, we're bringing them in, we're going to have a training for them. That might be 48%. If it's a foundation, our regular foundation rate is 11%. Some foundations will publish policies and we will follow that policy. Some don't pay indirect costs. So it's 0. And if they have it published, we'll go with the 0. It has to be a published policy, though. It can't be an email from someone that said, oh, I think we'll do 10% on this. It has to be an actual published policy. Otherwise, it will default to our regular rates. I did see a question. What percentage do researchers get for IIA? So, and Haley just posted a link to it. And Haley, you can correct me if I'm wrong, but I believe the way it works is that 20% of the indirect costs that come back to the university go to the college. And of that 20%, 16% becomes that RID that the college uses. And then 4% of that goes to the investigator. So I know that's a lot to take in here, but it's a little mathematical. Hopefully I have some math people in here, but it's basically 20% of the total goes back to the college. And then of that 20%, or that breakdown of that, you would get 4% into your IIA fund. But again, Haley just posted here a link to it so you can link to it yourself and see if I'm right. Maybe it's changed. And with that, I am going to turn it back to Michaela to go over the very, very important budget justification.
Okay, so we've gone over almost everything that you may be detailing out in the budget detail, the numbers of your budget. But almost always the sponsor will require some sort of budget narrative, budget justification as a written explanation of your budget calculations and how, your policies and rates, how you've arrived at these numbers. It's used to explain to the sponsor and the ASU accountants as well why you need the specific items you're requesting and how you determine those expected costs. You'll explain why items are necessary in relation to the aims and methodology of the project, as well as meeting the goals of the proposal. The more detailed, the better. A detailed budget justification demonstrates a thorough and careful approach to the project. Think of the funding agency as a bank. How would you demonstrate to them that you're a good risk? Are you asking for too much based on what you want to accomplish? Or are you asking for too little to actually do a good job? We've definitely had reviewers come back and say, I don't see where the personnel is coming from on this, who is doing this work, because there was so little budgeted for personnel salaries. So as long as you're being honest and accurate with your budget projections, you should be fine, really. Imagine if you're imagining it was your money and you were funding the project, you want to make it look like a good investment. So your research administrator will work with you to create the budget and justification. Usually they'll build it out for you and send you a template. That's what we do in the Teachers College. They'll help you build the budget, create a template for the budget justification that includes ASU's policy and rates and general language that explains those rates in the budget narrative. And we even kind of do like a fill in the blank for the PI to make sure that they're justifying people's roles on the project, the work that's going to be done by each individual, how the materials will be used, etc. So one last thing too that I just want to touch on is cost sharing or matching. Although it's not usually utilized, I just want to go over it a little bit. So cost sharing is the portion of the total project costs not paid for by the sponsor. In such a case, the home institution or a third party may contribute effort or goods or services or even cash to the project. It may be called matching costs. It may be in-kind contributions. It's only normally included if required by the sponsor. At ASU, we usually did not allow voluntary cost share. However, cost share is often prohibited by the sponsor entirely. Like the NSF will usually prohibit voluntary committed cost share on projects. But if it's required, we usually use faculty or staff time and effort in the majority of cases to meet this need. It's in-kind effort. It's cost shared effort, and it's accepted by most sponsors, and it's sort of the easiest type of cost sharing to include. It's easy to track and report. So a portion of project personnel salaries may be committed to this project, even though those salaries are still paid for by ASU and not the sponsor. Cost share, of course, requires extra approvals, approval by the department, approvals by ORSPA. So you'd be working really closely with your RA if cost sharing or matching is required. Any questions on cost sharing? Okay, moving on to global projects.
All right. Thanks again. So global projects, as of course with Zoom and with internet and online and everything else, ASU is expanding all over the world. We do quite a few projects internationally, and I've kind of learned the hard way a little bit, but it's been interesting to learn all the different things that go into it. So I'm not going to stay on this too long. The global projects in general, they present their own concerns, in particular in three categories: personnel, procurement, and travel. Many issues may come up, such as, do you need to rent an office in country? Are vehicles necessary to be purchased and maintained? What are you going to do with those vehicles after the project is over? Are there any specific requirements or policies or laws within the country regarding the hiring of personnel? How are taxes and other fees handled? Those are all what are called cost of business. Some of them make sense, to be honest. Some of them don't. Some policies that seem like they just were created by that individual government, to be honest with you, in order to keep money there, which is fine. But there's a lot of things to be considered in this. You must highly suggest, but I almost would say must, make sure you work early with your research administrator on this and get with them to have meetings with knowledge enterprise people to help determine the needs and the expected costs that you're going to face. These expenses may be substantial. I remember working on one large project, and we went through it. We created a budget, did the whole thing, until we realized that there were some fees and cost of business within a particular country that were going to end up being $200,000 a year out of our budget. A year on a 5-year project, that's $1 million. So certainly these things need to be addressed as soon as possible. Often they're not mentioned in the funding announcement. So make sure, again, don't think just because it's not in the funding announcement, it's not something you're going to have to consider. Make sure you work with the RA if you're going to be working internationally. Make sure you talk with them to set something up with Knowledge Enterprise and the international development people there that do a fantastic job. Saved me, I know, a number of times. Helped me a number of times to set that up. So there's a lot of challenges with global and international projects. Just make sure that you're aware of it and you get on it early so that it will create less issues later on down the road. And that being said, first, thank you to everyone who attended. Thank you to my colleague, Michaela, for working on this. Thank you to Haley and her team for providing us this opportunity to speak with all of you. And at this point, you can feel free to unmute and ask any questions or put it in the chat.
Yeah, thank you so much, Howard. Thank you, Michaela. I did answer a few questions in the chat. Hopefully those are satisfactory to those asking. If there are any other questions, feel free to just unmute yourself and ask. some of these details are very specific, of course, and very related to the proposal that you're working on at that time. So if you have questions as you build proposals, of course, your research administration support in your unit, RAS, of course, is available to you, rahelp@asu.edu, ras@asu.edu, and of course, our office, research development, as well, can get you connected to the right people for questions about budgeting and your proposals.
Hey, Haley, would you be able to share the international development website link? I don't know if that's something you have handy
Yeah.
as RD. I can,
No problem.
And
as
while we're
as
doing-
Howard said before, I've found them extremely helpful in the past for researchers planning to work overseas. And I know, not all RAs do a lot of international proposals, so it's great to reach out to those individuals like at the get-go.
Yeah, we've got a couple of different offices that help with research administration support for global things. So I'm gonna actually put in the global operations link here. And I think that's probably the best place to start. And then also, of course, the international development, which is another type of office. So you can review those resources and see what is really the right fit for your question. And of course, they're all willing to talk to you. So any questions are welcome.
Awesome. Thanks for having those links handy.
Yeah, of course. I will go ahead and stop the recording now.